So HIM stock, unbelievable. Did we expect anything less than that? Another fantastic quarter from HIMS, and as I always do, the last few quarters have just been absolutely amazing since this stock came onto the stock market. And there's been a bit of a running joke on the channel where every time they bring earnings out and they're just absolutely fantastic, I keep doing the same title, which is just HIMS unbelievable. And once again, we followed on with that title and continuing that trend. And at the moment, the stock is currently up. I'm getting some different stock price movements. I'm getting some that's saying the stock is up 7%. At one point, it was up over 16%. So we'll see where the stock is going to open up today. But wherever it opens it up today, it is still ridiculous what this stock is valued at. And even today, I saw these earnings, and these earnings, I said I won't make a video on this stock unless the earnings are incredible and there's a lot of new information to talk about, which we got, or if we have a crazy share price movement, which we are getting, but it's still not what it should be. This stock after these earnings should be up way more than what it is. I'm talking 30+%. These earnings were absolutely fantastic, and especially when you consider the valuation that it's at right now, it's just absolutely ridiculous. And to say that this company is only 5 years old and it's doing this at the moment, it's just a credit to Andrew Dunham at HIMS. He's done a fantastic job and they just continue to deliver. So let's look at this stock. It's absolutely amazing what this company is doing, and when you look at the valuation, just incredible. So we'll take a look at HIMS. So first of all, the EPS, they came in with 0.09 or negative 0.09. The expectations was 0.1, so the beat on the EPS by 0.1, which is good. Revenue came in at 95% compared to 75% expected. That was an absolutely insane beat on the revenue, and that led to a 14 million beat on the revenue. So that's the first number that we need to look at. It's a growth company. We need to see good revenue growth, and it delivered. And I thought when we looked at the last quarter and we saw the hiked up in guidance, I was like, oh, they're pretty tricky numbers. I thought potentially they could come around that 80% revenue growth range, but this was even better than what I was expecting. Q4 guidance, now this was insane. So they projected 159 million to 162 million, and this was against the consensus of 134 million. Absolutely unbelievable. You're talking nearly 30 million hike up on the expected Q4 guidance. That is absolutely insane. We talk about a really good beat on the EPS and a good beat on the revenue. You're talking deservedly a jump in the share price just on that. But when you're coming in with guidance like this, that is unbelievable. And also, I think the big thing that's kind of taking the headlines is they're projecting, which we heard last earnings, it could be as early as Q4, and they confirmed once again, EBITDA positive in Q4. So they've pretty much confirmed they're going to be heading towards that in the next quarter. We'll get that around February time, but this is a big turning point because it's great having revenue growth and the growth that it's at, which is just insane growth. But then when you start saying, okay, then you're going to start be profitable in Q4 and you're going to continue to make profit, that's a game changer. You can talk about a revenue growth story, and quite often what will happen, especially in the bear market, you'll see this very much in the last few months, growth stocks, the big argument the bears use, and it gets really loud in the bear market, is it's not profitable. That's what they'll be saying all the time. But when you look at this situation here and then you start saying, okay, but then you start making profit and then you have the revenue growth, that's absolutely insane. So that's going to be a really big point there. And at some point, this stock has to get the respect it deserves, because if you start putting these numbers in and you're profitable, that's absolutely insane. 2022, so they're expecting now the full range to be between 519 million to 522 million. I think that puts them around the 1 point something price to sales ratio, which is just absolutely insane. And that was versus the consensus of 479 million. So yeah, that's an even nearly a 40 million hike up there on the revenue side of it, which is just, yeah, that's absolutely crazy. So yeah, that's a great guidance hike there. EBITDA loss, so they also improved the EBITDA forecast. So they expect now to be somewhere between a 20 million to 18 million loss for this year. Obviously next year we'll expect that to be positive. And that was compared to what they were guiding for previously, which was somewhere between the 27 to 20 million range. So that's really good as well, is that while we're having that revenue being dragged up, the losses are getting less and less and less, and obviously going 12 months down the line, we're actually going to see that move into a positive direction as well. Average order value, so this increased as well. So this moved to $83 from $74. That was really good to see that people are coming on the platform and spending more money, ordering more products, and that is great. They also said the multi-plans as well is also coming on, so subscriptions from a long-term basis, keeping the churn down low, users sticking with the platform, and that proves how good of a platform it is. Well, we know it's a very good platform, but the fact that people are ordering more, staying to the platform, staying for longer durations, obviously that's what you want to be hearing from a platform like Hims. Probably the only little negative that I saw in this earnings report was this: Wholesale. So Wholesale, the numbers itself was 136% growth, which is fantastic. I got nothing wrong with that number. That's really good. And Wholesale is important because obviously we have the subscription plans and the online subscription plans that they offer through the health products that they do have Hims. But one thing they've been launching a lot recently is the Wholesale. And the Wholesale is really good because you start wholesaling your product to maybe stores like Walgreens, for example. People go into Walgreens, they see the Hims product for sale and like, Hims, I'll maybe buy that product. But then when you start seeing that sort of product or Hims product in a really reliable and a store with a big reputation like Walgreens, and you see the online health services that Hims offer, you're not just like, oh, I'm not sure on this online company. When you see a physical product in like Walgreens and you're like, oh, they're a serious company, they're in Walgreens, and then you see them advertising online for like online services, you're like, oh, I know them guys, they're in Walgreens, I've seen the product before. It gives them a little bit more bigger reputation as well, which is really good. I think that's something really important for them to be building on. The only negative that was there was no Q2 growth from last quarter, which obviously you want to see some growth quarter on the quarter really. They did say that will go back to some form of growth in the next Q4, which is positive. But just something to keep an eye on. The number was good. I just think that's just a number to keep watching. So that was probably the only negative that I have, and that's me really picking at something because it wasn't that big of a deal. And it's not the main part of the business either. So yeah, this was insane. Gross margins. In a time where, you look at these earnings here, in a time where you're seeing other health companies really get affected and, being a bit more cautious, pulling back on a spend, a few things, and Hims is just like full fire delivering these financials. But these gross margins in time of, and by the way, these results also in a recession, it's not too bad at all, is it? People said that, what was it? There was a few weeks ago, there was someone that brought out a price downgrade on Hims and said, oh, we don't think Hims can, execute on what they're saying. Well, whoever wrote that article and brought it down, I'll show you a screenshot on the screen. Whoever did that, I can't remember the name of the analyst that did bring it out, but whoever did that just had a shocker there, and that's why analysts, honestly, you don't want to be following them. But gross margins in a time where there's so much pressure on, inflationary environment, and then you hit 97% gross margins compared to 74% last year, absolutely insane. And there was hints that they could potentially carry on improving that going forward, which was unbelievable. EBITDA down at a 6.1 million loss compared to 9.8 million last year. So obviously we've seen the company moving more and more to profitability. That was a good jump from last year, and we know that's going to be happening. So that was great as well. They launched the Android app. So we heard it was either last quarter or the quarter before, they launched the iOS app, and the app to make it easier to get services, retention, push notifications, and they noticed a really big engagement from the Apple app or the iOS app that they launched, and that has great success. So what they've done now is they've launched the Android app, and once again they're saying they're seeing great retention as well through the Android app as well. So yeah, good to see that they're launching the Android version, and that should help them as well, and create more retention and potentially more orders, more average order value as well, which is great. New celebrity partnership, they did hint that they've signed someone for a new partnership in 2023. They seem to be pushing this quite a bit. We saw this with like Gronk. I think it was like in February start of this year. I think we had like Miley Cyrus potentially at the back end of 2020, I think it was. So they are quite big at these new celebrity partnerships. They have signed someone for 2023. We got no name yet though. Obviously profit going forward, that's absolutely great. This is a change of story here, is where it's great having revenue growth, but you'll always hear, no matter the case on how obvious the profit will be further down the line. You'll always hear the bears come out and say, but it's not profitable. And obviously the fact that we'll be able to say continuing going forward, now we're going to start hitting profit, that's absolutely insane. Now analysts, this is probably the key thing for me. Analysts, someone asked on the conference call, what are the targets now? Because obviously, profit is going to be great, but as well as that, how much growth are you going to command? The way that you're probably going to hit profit is you cut back on some of the spending slightly. And if you're cutting back on the spending slightly, what is the growth going to be further down the line? Because it would be great driving profit, but the big thing is if we have, start driving profit, but we still have crazy revenue growth, that'll be absolutely insane. Now, obviously, I can't remember who took the question on the conference call. I don't know if it was Andrew Dunham or the CFO. But they said the best way we're not giving guidance at the moment for 2023, which I said I think that kind of makes sense. Wait until you get the kind of data in, January, February, and then you can do your conference call and you can, or you bring your earnings out and then you can guide for there. You've got a lot better sight on what's going on there. That's what I was really surprised with, DraftKings coming out a little bit early and giving that guidance. However, we've seen the companies like DraftKings, HIMS, they always kind of go, they did it this year, they were like, oh yeah, we're going to grow at 30% rate, and then you look at this quarter here and it comes out with 95% growth, which is crazy. But they basically said the same what they've always said, which is they're expecting at least, one of the key words, at least 30% growth going forward. And the hint was that obviously they can probably look at delivering higher growth than that. But even if at 30% growth and you start driving profitability, this is still incredibly undervalued. But the suggestion is, and what HIMS have already historically done, is they've sandbagged numbers, at 30% growth, and we see them hike it up to 40% growth, 50% growth. So that still leaves the door open massively. I think the fact that they said going forward you can still expect 30% growth every year is fantastic, but the language they were using was suggesting that we're going to do our normal hint of 30% growth and then hike it up, carry on going forward. So if they are going to do that, we could see HIMS even next year come in with even higher numbers than 30% revenue growth, and then you start driving profitability. It's just absolutely insane. So yeah, my views on the quarter overall is that it was another 10 out of 10 quarter. I've never seen a business like this. Never seen a business like this. A business that is driving this growth, driving towards profitability. I mean, I said on yesterday's video, I was like, yeah, I think, we'll see, good numbers from them. The hype, the outlook last time, I can't see them doing it this time around. And then they come and hike guidance up, and the Q4 guidance goes from 134 million to 159 to 162 million. You look at the 2022 guidance, it's gone from 479 million to 519 to 522 million. The numbers are just insane over the board. Like, I've never seen a business like this bring out earning. It's not even just like a good earnings, it's just the way they do it, one after another, after another, after another. And the thing is, what is a little bit frustrating as well is like, and we've seen this, the share price reactions and how stupid some of these share price reactions have been. We saw in Q2 how fantastic the earnings were. There were fantastic earnings in Q2. And we saw on the day, the share price have a little bit of a bump up. But we went from like $6, $7 stock, and then from that point of view, we just downtrended to this time here, to Q3. We downtrended from, $6, $7 back down to $6, back down to $5, back down to $4. I think we even nearly touched the $3 range at one point. And it was just stupid. We have an absolutely amazing Q2, and the stock then carries on downtrending, and then we then lead into another amazing Q3. And it is stupid just to see this business performance. I was going to say like the business performance has been like this, but it's been like that. The performance has been absolutely amazing, and it is frustrating to see the stock not really do much when the business is just performing unbelievably good. And you look now, it's like a 1 point something times sales ratio, price to sales ratio now. It's insane value, and it's frustrating. It's one of those where I said this the other day when DraftKings brought earnings out, and HIMS is exactly the same. If you're judging HIMS off the share price over the last 3 months, you'd be like, oh, it can't be that good. And then you look at the financials and it's just unbelievable. And yeah, I thought these earnings were unbelievably good. And I look at this stock at the sort of prices it is at today, which I think is somewhere in that $4 range. I look at this stock and I'm like, you can argue the case, not even for like this to be $8, not even to be $10. You could argue this stock should be nearly $15 right now. It's absolutely insane how incredibly low this is, and I think it's a fantastic opportunity. It is a fantastic opportunity at the moment. So yeah, I mean, we'll see where the stock kind of balances out today, but if anything, it just pushes me more to the end of like, I need to be buying more of this stock. The fears that you have around it, every quarter just getting pushed away. The fact that the growth's going to slow. It's not slowing. It's unprofitable. It's hit profit. We're entering a bit more of a recession, environment. It's going to slow down. Look at the likes of T-Doc, and it just keeps firing away. And in fact, it's doing even stronger. It's capitalizing on this opportunity right now, and it's just, unbelievable good. Generally 10 out of 10 earnings. I'm shocked, and I think the title is absolutely perfect for this video anyway. So let me know what you think of him's earnings in the comments, guys. If you could, hit the like button if you're new around here, subscribe, and catch you in a bit.